Morning, everyone. My name is Shanice Ngube, and it is my honor to welcome you to this session. I will be your MC for the Network International Room for the first two sessions, and I'm excited about today's topics. On that note, I'd like to introduce our very esteemed panelists, starting with Radhika Sihin, Tim Masela, and Kagiso Motibi. And they're going to take us through a very fascinating topic of beyond cash and non-banks in the shift towards digital payments. So without further ado, I'd like to hand over to our panel.
Thank you. Thanks so much. Good morning, everyone. My name's Lal Horsley. I'm from the SARB. It really is a privilege to moderate this discussion today and to be accompanied by these esteemed panelists. The topic that we're talking about today affects each one of us in this room, and it affects our households, businesses across South Africa, the role of cash and how we move beyond cash. As we know, cash still dominates in South Africa. It is trusted, it is familiar, it is tangible, but it also carries costs. It is expensive for banks, for retailers, and for the central bank to issue and manage. It also contributes to informality and criminal activity in the country. And it holds us back from accessing broader financial services. When we look abroad, we see examples where there's been rapid digital transformation. The often cited examples are those of India and Brazil. And closer to home on the African continent, we've seen what's happened with M-Pesa and how mobile money was used to leapfrog traditional rails. All of these highlight an important point around the role of non-banks, and that non-banks are not passengers in this journey, but increasingly strategic enablers. But the South African story somewhat always seems different. We have deep structural inequality in our country. We have very high cash usage in townships, in the township economy, and through informal trade. And unlike some other markets, we have a very advanced banking sector that sits alongside a large unbanked and underbanked population. So the question is not whether we can copy and paste from other jurisdictions. It really is about how do we tell a unique South African story, and how do we move the conversation beyond cash. So this is what this conversation is about. I'm joined by three panelists that bring a different lens to this conversation. I have 5 themes that I want to cover in this discussion. That's a lot, right? But when you have the brain trust in a forum, you have to maximize the time that you get with it. So we will do our best to get to the Q&A as well. But there are a few questions that I would like to work through with the panel. So if I go into theme 1, the role of non-banks in reducing cash. So let's start with the big picture. Around the world, non-banks have been central to the shift away from cash. In South Africa, they are increasingly important players in providing mobile money, in acting as acquirers or as wallet operators. But the question is really, what role should they be playing in shaping our digital future, and how far should that role extend? So if I turn to you, Radhika, from your experience, what do you think is the most compelling opportunity that non-banks bring to reducing our reliance on cash in South Africa?
Thanks, Lal, and thank you, Paza, for giving me the opportunity to speak here. So I think you're completely right in saying that non-banks are no longer passengers in this ecosystem. Non-banks bring agility and proximity to the underserved market. We have definitely seen globally that they have been very instrumental in breaking the inertia around cash. Their creativity and their innovation results in them being able to fix payment pain points that other people can't fix. And for that reason, they create hyper-local solutions that are both simple and cost-effective. Now, this is not just technology alone, so let me elaborate a little bit. If you look at UPI, fintechs on the UPI rails in India, for example, they have brought overnight almost, managed to get small digital payments into the formal sector. That's in the same vein, you kind of look at Nubank with PIPC and the partnership there, and they have made same-day settlement a normal part of life. Now, as I said, it's not just technology alone. It is also because those authorities in those countries have created an enabling framework for fintechs and non-banks to participate under a regulatory banner. And for that reason, they have created trust in these systems, both on the consumer side and other players in the ecosystem. Now, to just share a little bit about talking about regulatory frameworks, I just want to quickly do a quick pit stop around Singapore. They took a slightly different approach in regulating non-banks and fintechs. And they focused not just on the technology, but also in building trust in this. And they did this through a risk-based proportional approach, where they regulate non-banks in Singapore based on functionalities rather than being institutional. So if you do deposit taking, you are regulated as a deposit taker. If you're doing transfer of funds, you are being regulated as a remittance provider. And for that reason, that built trust in fintechs from the consumer perspective. So they're willing to use their services. Now, I think such regulatory inclusivity can unleash the competition and innovation, making digital payments a normal part of life, almost instant, ubiquitous amongst households. And for that reason, we can have less reliance on cash. And if I bring it back home quickly, you ask what can we do in South Africa? We already have a very strong, secure system, as you said, a world-class system. And I believe our policy environment right now is moving in the right direction. We are looking at enabling regulated non-banks in the space, opening up the payments infrastructure. We're looking at proportionate licensing and clear risk management guardrails. Now, I do believe that non-banks are the lever to reducing reliance on cash, and their creativity and innovation will take us a long way. I do want to close with saying that we should not see non-banks necessarily as replacing banks. In my view, they're merely shifting and expanding the digital frontier of the financial system. And the more we digitize, the more people we reach, the less reliant we become on cash.
Fantastic. I think those are great points. Tim, let me turn to you and get your reflections around how do you see non-banks fitting into the payment ecosystem modernization journey, and what principles should guide how far their role extends?
Thanks, Lyle. Good morning, colleagues, and also appreciate the opportunity offered by PASA to join this dialogue. Lyle, I think we are aware that non-banks had been active in the South African payment system, albeit perceived to be in the periphery. That is, offering services that were in the system operator space and third-party payment providers. I believe that the regulatory authorities should take advantage of non-bank agility and the positioning that they have in the market to ensure that we can achieve the public policy objectives, and indeed they have a role to play. In South Africa, as colleagues could be aware, the regulators are changing the regulatory model in payments from an entity-based regulatory framework to an activity-based framework. This needs to be underpinned by the focus on ensuring that risk is managed in the system. That is, we're not going to have to look at whether you are a bank or a non-bank. For as long as you meet the criteria and risk is under control, you should be able to enter the system. As Radhika indicated, in other markets, the proportionality issue is also fundamental. That is, the framework that we put in place should be calibrated to ensure that it concerns itself with addressing the risk. And indeed, we could find that the current regulatory framework is broad for banks because banks are active in many facets of the business. But when a non-bank enters, like where you hear that in other jurisdictions they call payment banks, you'd have to have proportionate regulatory framework that ensures that they can enter the system, the risk is under control, and services are offered. That is, the emphasis is same risk, same regulation applies, and anybody that qualifies should be able to enter. That is the foundational enablers that the regulators are looking at putting in place.
Great. So, Kagiso, let me turn to you. From the market side, what makes consumers and merchants actually choose non-cash solutions over cash? And what do you see as the biggest barriers from your perspective, given your role at MTN?
Thanks. Yeah, from a market perspective, I mean, just to echo some of the sentiments, there is still a significant role for non-banks to play. I mean, if we take a leaf out of markets that are similar to us, so they have advanced banking sectors. So, I mean, if you look at Southeast Asia, if you look at India and Brazil, they still did not address the full scope of the cash challenge. And non-banks were able to step in to supplement what these banks were doing in order to solve the cash challenge and ultimately digitize cash. So to that extent, we think South Africa certainly is on that journey. It'll be a combination of policy and regulatory factors that drive how quickly we change as a market. But certainly non-banks have a role to play. And I think whether it's banks or non-banks, without even being binary and thinking about it, I think the race is really around who best solves the pain points around consumer and merchant, who is best able to frame and understand the problem, understand from a consumer perspective, why do they resort to cash? What is really the underlying reason? If you had to segment the journeys of the different consumers, and why some are led to withdrawing money out of their bank accounts within 3 transactions in a lot of cases, why cash seems to be convenient. Is there something else on the other side of the coin where we have to think about the merchant and what extent they influence the choices of the consumer? And I think in that framing of the problem or diagnosing of the problem, then it's a matter of which bank or non-bank is able to then formulate solutions that essentially would make a consumer or a merchant rather prefer to use a digital solution. But I think just given the complexity and the nature of the problem, I think as a sector, while we've made inroads in digitizing cash, I think that we're still a long way away. And I think it will be an ecosystem approach that actually leads to this problem being addressed. And again, taking a leaf out of the markets that are actually great reference markets in that they still have a strong banking sector, but non-banks have come through. Like, I mean, if we look at Thailand and what's happened with GCash, it's a similar sort of thing where actually they turned their strategy on their heads. Rather than focusing on the consumer, they addressed merchant solutions because they actually felt merchants were really the driver in influencing consumer behavior. And what that then led to is a huge scaling in their consumer business and ultimately digitizing cash in that Thailand market. So we anticipate similar dynamics happening, especially with the movement that's happening from NPSD, what's happening with Pay Inc. I think all the building blocks are there. So it's actually quite an exciting time. And non-banks have a huge role to play. And I think whether it's a bank or non-bank, the extent to which there's innovation around real customer pain points rather than what we perceive or conceive to be the problem, is the extent to which customers will trust and adopt solutions, whether it's from a bank or non-bank.
Perfect. So I think you've given us a great segue into theme 2 out of 5 themes. So let's look at merchants, right? Merchants acceptance and SME economics. So merchants are at the front line of the shift towards beyond cash. If they don't accept digital payments, then consumers will stay with cash. So, Radhika, turning to you, globally, QR codes and soft POS have opened the door for small merchants. What do you think would unlock SME acceptance in South Africa?
Yeah. So merchant acceptance is basically the tipping point is between digital payments and digital adoption. And that turning point comes quite naturally when digital payments' value proposition makes more sense than cash. And that is not that simple. So without getting too much, because we are looking at time, into any of the overseas examples, I would say in South Africa there are 3 barriers right now which we need to overcome in order to increase SME acceptance. One is cost and speed. So the transaction fees has to make sense for a small township shop owner or an informal trader. They have to see value in the digital solutions. So we need to simplify the economics quite simply. Small merchants can't pay these high merchant discount rates that we see. And the second one is that they want instantaneous settlement so they can see the cash, because cash flow is, it's the lifeblood for SMEs. Now, very quickly to pick again on Singapore, their government subsidizes the MDR to support digitized payments for small vendors up to a certain point per month. So there's a government incentive there to build up SME acceptance. I think the second point I want to say is that it has to be easy. It needs to be seamless to onboard customers, either through eKYC or digital tools, so that the consumer can pay the merchant almost immediately, right? So that's another area that is a bit of a pain point for SMEs. And lastly, the issue around convenience. Interoperable QR standards and instant settlement are absolutely key to making sure that the acceptance levels rise. Now, when I talk again about interoperable QR codes, one of the things, again, and I apologize for always going to Singapore, that is my soft point.
Your
is,
home away from home.
Yeah, my home away from home. And that is because they created a standardized interoperable QR code that can be used for both wallets and banks. So it's simple, there's no terminals, the economics are not complex, and they see their cash instantaneously. And that's what makes them feel comfortable in the space to be able to say, okay, I'll accept digitalized payments over cash.
Okay, great. Kagiso, let me turn to you again. So what are the top frictions that Momo faces when onboarding small merchants? And if there was one change that you would make, what would that be?
Yeah, so I think when we look at the merchant side, I think there's actually a number of frictions. And actually, I think in addressing the merchant side of the coin, you kind of have to be holistic in your approach. And I think Radhika touched on some of them, right? So I think from an acceptance point of view, I think we need variety in acceptance form factors from, especially around the low cost side. So in mature merchant ecosystems that are digital in nature, you don't necessarily find an over-reliance only on the point of sale or devices. You should also find QR occupying a substantial share, just because it's fit for purpose for a certain type of SME, right? So I think just the broadening of acceptance form factors, whether it's soft POS, certainly QR, will definitely go a long way towards including more merchants who, quite frankly, the POS terminal is just, even as much as you may discount it, may be just too much of a barrier for them to transact. And then they go on to discourage customers from using or paying through those POS terminals by pricing differently, right? So there's that acceptance piece where we just need variety, I think. I think from a South Africa unique perspective as well, the cash handling solutions that underpin acceptance. So once you accept, I think how cash is handled, whether it's instant settlement, whether it's the security around it, there does need to be innovation. But we're seeing encouraging innovations, I think certainly from your shop-to-shops, Lesakas of this world, but there's still room for that. And then obviously once the cash comes into the store of value, I think how invoicing, ordering, payments are made, whether you default to cash or whether you're able to do that digital partnering in bringing together the propositions and certainly in staying close to the market around these pain points. One will gain better traction in digitizing merchants. But I think Radhika also touched on the fact that there is enabling regulatory and, I guess, standards that need to underpin all this. So interoperable QR, certainly what we anticipate around what's happening with PayShap on the merchant side. Those are the things that I think become key.
Got you. So, Tim, Kagiso touched on the sort of unique South Africa cash challenge that we seem to have. And it's cash is not just a payment method. It's deeply rooted in our societies and our economic fabric. So when you think about the cash intensity from a South African perspective, what unique features stand out for you compared to what you see in other markets? And how do you think that should inform the approach that's taken by the SARB?
I think, Lyle, at the moment, everybody will agree that we have a sophisticated financial system, and we have a highly banked population, albeit the population is using the store value in the bank account as a post box in some respects. And then we have a thriving informal sector that could be supported, as Kagiso indicates, from the solutions that we can make available. It could definitely make that sector thrive more and indeed contribute to our economic growth. Unfortunately, we also have drawbacks, and we have the underserved economy where perhaps payment services are not reaching people, and the solutions are not there if you take the far-flung areas. And I think we can really solve for that. Then we have, well, we anticipate we could have sectors that would be resistant to digital payments, and others, of course, because of the nature of the business. I don't know whether the taxi industry will be easy to crack. But we need to come up with propositions that are attractive for those markets to be able to see sense in their business thriving by adopting data. Then we have consumer literacy issues. Some people were saying income levels are an impact. I disagree. People were saying because we have low incomes, then we withdraw it all in cash and we transact in cash, but we can still transact digital. I don't think that's the reason. There's interventions that we can take. Indeed, I think it was Radhika that touched on this before. The pricing of services that merchants need to consider, the pricing, even if it's perception for the public to say, if I transact digital, it may cost me something, but cash is free. We need to address the pricing issue in a holistic manner and ensure that we couple that with consumer awareness and financial literacy. But the bottom line is the regulators are taking the catalyst role of doing what they need to do in their space and catalyzing for change in the market, especially by ensuring that the environment should be conducive for change. Of course, then we have to address the risk that is perceived in digital and ensure that we get people comfortable with transacting digitally. So there's a journey underway, Lyle, and I think we can crack this, but it needs a holistic approach which is in the public-private partnership, and we be frank about some of the stumbling blocks that we need to challenge, and one of those is pricing.
Thanks so much, Tim. So you mentioned trust, consumer protection. So moving on to the next sort of theme around inclusion, trust, consumer protection. So trust is often one of the reasons why people stick with cash. It's instant, it never fails, and it feels safe because it's tangible, it's something that you can touch and feel. So turning to you, Kagiso, what baseline protections do you think every provider, whether bank or non-bank, should be thinking about to win consumers over away from cash?
Yeah, so no, I think this is a pertinent question. So trust absolutely underpins the rate at which the market adopts whatever digital solutions are out there. But I think, and Tim touched on it, what goes hand in hand with that is consumer education. So I think in our experience on the market, the extent to which you resonate with customers and the extent to which they buy into what services you bring to the table is on one hand their ability to anchor your services on some brand they can trust, right? So we found that to be quite important. But the other element as well is just how you're able to communicate and get them to understand the services and why it matters to them. So those pieces we found in our experience go a long way towards bringing the customer in. Once they're in, I think building their trust on that becomes the extent to which you're able to provide mutually reinforcing proof points that their money is safe, it's reliable, the service is instantaneous and convenient, and their cash essentially is safeguarded by your sort of technology. So it is that kind of journey. So at initiation, it's really around, do I recognize this brand from somewhere? Is this entity resonating with me? Are they really appealing to my true needs, or are they imposing something on me? But then once you get them in, it's about that constant building of trust through actions and activities that reinforce that actually your service is reliable. And then obviously, just given innovation and the pace of change around technology, I mean, I think underpinning all this, there does need to be strong regulatory technology that kind of prevents incidences of financial crime, fraud, and whatever. So I think for the customer experience side of things, what maintains their trust is an underpinning capability of strong regulatory tech capabilities that enable suspicious transaction monitoring. You're able to anticipate issues that could actually create friction. But it is a journey, and I think it's going to be increasingly complex in these technology-led innovative times that we're in. So, but yeah, it's a constant journey, and I think at MTN, we recognize that without trust, and certainly without the right levels of consumer education, it becomes very difficult for nascent services to gain adoption in the market.
Absolutely spot on. So, Tim, if I turn to you from a regulator perspective, even though you are a retiree, a pensioner, how do we ensure that inclusion is part of the design in how we think about our payments ecosystem modernization work that we are doing at the SARB, and not something that sort of gets added on afterwards? And how do you sort of build the correct consumer journeys in order to increase adoption of digital payments?
Thanks, Lyle. I'm tired again.
It's like no one knew you were on retirement.
Yeah, no, I think, Lyle, if we take the journey that we are on in terms of the payment ecosystem modernization, and the fact that this program was initiated on the back of the vision goals that we are all aware of, and it is outcome-based. That is, we start with the outcome we would like to see, and we say what actions and efforts should we put to deploy solutions out there. So colleagues would be aware that the vision goals are 9, and one of them is, well, actually the overarching one is financial inclusion. If you do all the rest, then you will achieve financial inclusion. So because the payment ecosystem modernization departed from that frame, the outcome that we need to achieve of including people in digital services is at the center. Now, you will also recall that there's a deliberate focus of the program that looks at ensuring that we build the building blocks from which the providers of services, and we don't need to differentiate whether the banks or non-banks, will deploy products and services. So we collaborate in ensuring that the middle center is realized. And of course, the central bank then takes its catalyst role working with the private sector to ensure that we embed the right use cases in the solutions that we put out there, to ensure that we achieve the vision goals, of which the overarching one is financial inclusion. Therefore, I would argue that the program is at the outset deliberate. Financial inclusion is not an afterthought. It's something that was thought of as part of the key outcomes that we would like to see, and thus we'll be able to nail it in the right way. Of course, there's issues that we need to ensure that we identify the barriers that could impede our progress, as well as ensuring that we have opportunities identified, so that all our efforts are directed at ensuring that what is realized at the end is effectively what would actually move the dial in terms of financial inclusion. And I think we are on the right path because that outcome is at the center.
Perfect. Thanks, Tim. So you've brought us into our final theme, which is around partnerships, interoperability, and emerging tech. So from the conversation so far, it's clear that no single player can move beyond South Africa beyond cash by themselves. It will require partnerships, partnerships between banks, non-banks, between regulators, and so forth. So let me turn to you, Radhika, and just ask, where do you see the strongest opportunities for collaboration in South Africa, whether on interoperability standard, merchant solutions, and so forth? Maybe just your thoughts on that.
Yeah, so Lal, I think we've touched a lot around interoperability and merchant solutions, and we know that generally these type of collaborations will have to be between the regulator and the stakeholders that are involved. And in South Africa, we've always had a very good framework for consulting and speaking to people and getting feedback around our regulatory framework. But if I can touch a little bit on consumer services, which I think Kagiso and Tim has now alluded to in terms of our goal in South Africa and our objectives. And Kagiso in saying that we need to really understand the market, we really need to understand people. And I want to bring it back to that to say the biggest part of collaboration and partnerships is actually working with people to understand the market a bit better, to understand the consumer a little bit better. In order to create trust in digitized services and move away from cash, as we've already said, we need to focus on the trust factor. And part of the trust factor does come back to the consumer protection conversation around how do you do fraud prevention? What about all the scams that are coming through on the digitized side? How do we give consumers levers to look at recourse mechanisms should anything go wrong so that they feel safe in transacting in the environment? We go back to your conversation around education campaigns, digital literacy. These are all things that need to fit into the ecosystem. They're not specifically linear, where we say, okay, we speak to everybody and we get the regulation out there. But actually go and meet people where they are and understand why they feel the way they do. And what are their specific needs? So I want to say that, definitely we know that we can, to some extent, institutionalize collaboration using regulatory sandboxes, which you know very well about, open consultations, shared testing environments, at least on the regulator financial institution component. On the next part with the public sector, where inclusion and innovation don't necessarily happen in silos, the important thing is to go out there and also hear the consumer voice. And the question is, how do we do that? Because that's not actually a simple request coming through. Do we use consumer groups that are the voice of the consumer? Do we go into the townships, etc., and understand, and the rural areas, and understand what are their real pain points and how can we address them? So I'll say, in closing, that when regulators can enable collaboration, industry does build the rails that we can all benefit from, and this I'm talking about both the large corporates and township traders. I think that's when we look at this from an end-to-end solution, from the regulator right until the consumer, we will move away from a fragmented system to a truly connected digital economy.
Perfect. Thank you so much. So I managed to go through my 5 themes. That's amazing. My panel was spot on with their responses. There are a few questions that have come through, and we have just over 4 minutes, so I think I'll just pick a few of these up. There's a question here around how do we measure success when it comes to financial inclusion? The questions are not, some of them are directed at some of the panelists, but if I can maybe ask, does anyone have any thoughts around, so what does success look like? If you say we've increasingly adopted digital payments, we've advanced financial inclusion, how do we measure that? What does success look like? Kagiso, do you want to give it a go?
Yeah, and actually, I mean, I think it's a framework that Treasury normally shares. I think in the regulatory community that, I mean, financial inclusion, you have to look at it in 3 components, right? So access is one, quality is another, and usage is obviously the 3rd pillar. So I think as a market, clearly from an access perspective, if you use access as a lens, we've kind of done quite a lot there, certainly on the continent. But when you look at the quality, right, which obviously talks to the extent to which you're able to address pain points, I think there's a journey to go there. And that's evidenced by the usage or the lack of usage or the quality of financial inclusion. So, I mean, I think if you use that framework actually to gauge how we're doing on financial inclusion, I think it's a good yardstick. I think access, we've done a good job, but certainly long way to go. When it comes to quality, it'll require a segmented and multifaceted perspective of just understanding the real pain points of the different types of consumers and merchants in an unequal, spatially planned market, right? So I think that's where we need to make progress. And then it'll come through in the usage, right? So obviously where we see cash digitized, where we see more consumers that are creditworthy, but are deemed thin file in the current context, actually being extended credit, you know. So when you start to see those things happening, where more people are saving, then I think we can say that, yeah, we have had better traction around financial inclusion.
Perfect. I'm going to be so bold as to put one question to Tim in the last minute and just over a minute. So Tim, the question is, as the outgoing head of NPSD, what are the 3 things you would implement in the next 12 months to get us to a cash-smart digital community, especially in the informal sector, i.e. the taxi industry? I'm going to say, Flint, Tim, give us just 1 or 2 things. It doesn't have to be 3. You've got 1 minute and 20 seconds.
Yeah, I'll just indicate that colleagues are aware of the digitization roadmap that we have put out. But if I just take the next 12 months, and I mean the digitization roadmap is segmenting the industries into cash-infested spaces that we need to give focus to. But I would say the current regulatory reforms that are underway, that needs to be implemented within the next 12 months. If they are combined with effective use cases that could be embedded into PayShap, we will be able to move the dial in the right direction in the next 12 months.
Perfect. Thank you so much, Tim, and thank you very much to the panel. Please give them a round of applause. We have run out of time. I can say with confidence that there's a new bomb squad in town, and it's these guys right over here. Thank you so much, everyone. This was really great. Thank you.